Yeah. Hi, everyone. Welcome to today's webinar. I am Nitish Shukla, head derivatives, and today we're going to be talking about about a new tool that we have come up with for our traders. It's called the Strategy Builder. Okay. So before we deep dive into the Strategy Builder, I would just like to take a moment to understand or to discuss what are options and why we want to do strategies in the first place, right? Some of you may be already familiar. Just I'll just take a minute. So what happens in the normal use case when we study about options, when people tell us what is an option, what is it used for, usually you will hear things like hedging. You can hedge a risk, or you can take a calculated risk when by trading in options instead of the underlying itself, whether it is index future or whether it is a stock. And also, of course, it has its own inbuilt leverage, right? So recently SEBI rules removed all manners of leverage from option trading. The reason is simply that option itself is a leveraged instrument. That means for every point, every 1% that the underlying goes up, the underlying may only go up by 1%, but your stock can actually move up by 5%. Sorry, your option can move up by 5% or more. So it's already a heavy leverage instrument. So therefore, I mean, the leverage attracts us. Why make 1% a day on a stock when a large movement can help us make more? But then it also comes with its costs, right? So specifically, the lot size dictated by the exchanges is specifically one of the reasons why we have such lot size in such large numbers, to discourage speculation in options, right? And why do they want to discourage speculation in options? Is because just like just as the leverage helps you make more money, you also put a lot more money at risk, by taking up naked positions. Naked position meaning you're either only buying a call, or you're only buying a put, or you're only selling a call, or you're only selling a put, and nothing else. So these are naked positions, and naked positions inherently have a lot of risk. Most especially if you're selling. Definitely, if you're selling, you're putting yourself at the risk of complete downside. Like there is no limit to how low it can go. And even when you're buying, options are not cheap. Options are pretty expensive instruments to deal in. So I think the first reason you should look at doing strategy, especially if you're starting your option trading journey, is so that you can take a more a hedge position, or you derive profits not just from speculating whether the underlying will go up or down, but you have other means. And we'll see how option strategies, that is taking hedged positions, multi-leg positions, will help you de-risk. Okay, so now that we're on the same page as to why we need strategies, now let's look at our brand new strategy builder, right? So of course you'll need to log in and come to the FNO tab, the FNO landing page, and here you need to go to the overflow menu. You will see a strategy builder right here. Okay, once again, you log in, you go to the FNO tab, go to the overflow, and then click on strategy builder here. The first thing you will see will be the option chain for Nifty for the upcoming expiry. Okay, so today's expiry is done, we assume, and now we want to build a strategy for the next expiry. Or if you want, if you really want, you can change this to any underlying you want, right? You can pick Reliance if you want. So you have your single stock options listed here. You can pick a bank Nifty if you want, but let's stick to Nifty for today. Okay. Here we pick Nifty 50. We can change the expiry if you want. You can make it next month, and so on. There is also a very decent FAQ here, so you can it'll open on how to use. So definitely, if after this presentation after this cast is done, screencast is done, feel free to check it out. We have given a decent amount of explanation here, and if you want, we can also add if any questions you have which you think should be in the FAQ. Okay, coming back, let's continue our tour of strategy builder. The thing you will see, first thing you'll see here is the RF rate, which is the risk-free rate. In line, we could innovate here, but in line with NSE, we have kept it at 10%. It's a fixed 10%. We see the Nifty spot, for which at which time this was gotten. So I guess this will be the closing price, right? As you can see, this here Nifty has closed at, on the top of the page. You can see Nifty has closed at 17,877 and 40 paisa. That's the exact number here. And of course, this is today's date. Below this, you will see a complete option chain. Okay. This is the Nifty option chain. Right now, you don't see anything under it, but let's go through this option chain. Here, what do we see? So if you're buying or selling an option, you're hitting the other side of the market, right? So bid is for sell, because you'll be selling it at the bid price, and ask is for buy, because you'll be buying at ask price, right? So we don't care so much right now. We should not, right? We should not care so much for LTP itself. We should be worried about where our trade will find liquidity, right? So in that sense, we have given buy and sell buttons on both sides, on the call and put side, right? And on clicking either one, so let's say we have an ATM short straddle strategy, right? We're thinking of shorting ATM straddle until let's say next week. I mean, it's kind of hard to imagine holding on to that seat. It'll be quite a hot seat, but let's think about it, right? So we come to the 17,850. That's about ATM for us. Sell the put, and we sell the call. Right. So here we see the second part. Now we see the strategy being built. Right. Now we're actually building the strategy. Let's go through this. This is the strategy editor. So the first part that you saw of the strategy builder is the option chain, where you do all the actions of buying and selling, and we'll discuss a few more features of that shortly. And this is the strategy editor. Here I can edit my strategy to my heart's content. I can build it to whatever I want. So this is the sell call, and this is sell put line. Notice one thing immediately, and here is, let me increase the, it may be very, very small for you. I'll take this out of the way. Yeah, I hope my screen is more visible now. Okay, now it is a bit of overflow. All right. So here, let's look at the strategy itself. Okay. The first line is the call, second line is the put. The first thing odd that you may be new to you would be these two columns, which is K minus S% and K minus S hash, right? Or number. So what this tells me, and it will come in handy later, is what this tells me is how many strikes away from ATM or from the spot. From the spot, so that S stands for spot. So how many strikes K is this contract away from the spot? So here it is -1. So it is one strike lower than the spot, which is considered 0 here. If I had constructed the strategy on the higher end of the strikes, this would have been a positive number, and this would, it would have been a larger positive number. Similarly, how many percentage, is my strike away from the spot? So it's 0.15% below the spot. This will come in handy later, but just note it. The next most useful thing to know is the strategy delta. So I'll just quickly skip the explanation. I mean, I'll quickly explain what delta may mean for people here. Delta is the rate of change of my option price. Remember when I said it's a leveraged, options are leveraged inherently? This is what represents the leverage. So when the underlying, which here in this case is the Nifty index, when it goes up or down by one point, right? 1 point means 1%. When it goes, in absolute senses. So when it goes up or down by one point, this option, this is the Nifty put option, it will go up by Yeah, so it will go up or down by this much. Okay, the signs are a little off here. So when I see a negative, so one option will have a negative delta because it's aimed at, you know, it will get triggered when we are moving in one direction, and the other option will have an opposite sign because it will get triggered when Nifty takes the opposite direction. Now, what I want, and this is where you de-risk, right? This is where you de-risk is you have, you know, the total delta of the two cancels each other out, and we have a position with a much smaller delta. So that tells us that our option strategy will not change much. When the underlying, as or at least not nearly as much as the individual legs themselves, right? Then we look at the gamma. So, you know, as you must know, gamma is additive, right? So we see the total strategy gamma. We see the total strategy theta also, right? And we also see the total margin. So in this one view, we can see everything that there is to know about this strategy total. Okay, what is the margin required? That's how much I will need to actually execute the trade. What my risks are, and what my strategies. I mean, short strategy is usually to make money from theta decay. So here we find out how much theta decay we can expect from this, right? If I want to change, something about this option, I can change the option here, right? I can increase the quantity, decrease the quantity. So let's say I want to increase this quantity, yeah, and I will increase the second leg also. I want to double my bet. Here we go. Okay. Now, once I'm done editing my strategy to my heart's content, I can analyze. And here we go. So on the right-hand side, you see the payoff table. And on the left-hand side, you see the payoff picturized. Here we can pick the range in which we want to analyze. So let's say I want to analyze in the plus to minus 5% range. This is my payoff. Okay, this is my payoff at expiry. If I hold the strategy till expiry, and this is my payoff today itself. If this is more from the payoff equation, and this is more from the Black-Scholes equation. So this is how the valuation would change today if the underlying moves. Another thing that we have done for this is that we not only do we analyze the payoff here, we can also analyze the change in delta. So here we see the change in delta as the underlying moves. So at 18,000 we can expect this much. At 18,500 we expect this much delta, and if you go the other way, it will work similarly. Same thing, I can visualize my gamma, my theta, and my vega if if your strategy is actually going into those Greeks, then these will get important for you, right? So I can, and now comes for the part the part where those of you who want to do your own calculations or do your own scenario analysis, you can actually download in Excel. I'm on Linux, so I'll be opening this in LibreOffice. Yeah, and here you go. You have not only the strategy table, but you have the builder and the analysis output at your fingertips. Yeah, I realize it can be small. I'm just giving you a bird's eye view of what you just downloaded. So you've got your entire option chain here. You've got your entire strategy along with the Greeks and so on here. And you've got your entire analysis here. Now you're free to play around with this as much as you want. In an upcoming webinar, we're also going to cover finding the optimum, specifically for short straddles, because short straddles are basically, you're trying to. I mean, you should be aware it's not called the edge, but what you're trying to make money from is from theta decay. But at the same time, you're taking a risk of the delta of the position, right? So different positions will have different deltas and different thetas. What is the optimum? In an upcoming webinar, we'll be discussing how to calculate that, and that we'll be discussing using these sheets only, these downloaded strategies. Going back quickly, covering one more feature of strategy builder. So what did we see? We saw that we have two sides here, two sides each. I think there's something went wrong here. Okay, they didn't combine it. So now Let me just reset the view. Yeah, now we're starting from a blank slate. Now let's say I sell this option, and then I realize that I want to add one more. So however many times you click sell, that many will keep getting added. Okay, so now we see the size is 3 now. I clicked sell 3 times, so it's now 3. Now let's say I decide that I want to reduce that size. I can click buy here, and since buy, I'm buying the same contract as sold, it will also reduce the size here. Reduce, and gone. Okay, so now I've pretty much reduced everything. Now let's say I want to buy this again. Let's set up a long straddle on the other side of the ATM. Yeah, now you see the K minus S is 1 because we are 1 strike above the spot, which is 0, considered 0, and we are 0.13% above the strike, above the spot, strike wise, right? So after we are done analyzing, let's assume that we're done with the analysis. Now I can add it to a basket and trade it. Okay, so this is my long, this is my Nifty long straddle. Oops, go to wrong. Yeah, now we see that it has been loaded into a basket. Right, and now I this is my last chance, but I know that I have analyzed each and every nook and corner of this strategy using the strategy builder. So I will place the order and proceed. Right. So currently the market orders can only be placed when the exchange is open. That is expected, but I mean in normal conditions, if the market was running, it would have gone ahead. Right. Yeah. So and just a couple of features that are up and coming for the strategy builder. In very shortly, we will also have a save strategy button here, and you'll be able to and saved strategies tab here. So you'll be able to save the strategy and keep reusing the same strategy again and again. Say for example, if you have an ATM straddle strategy, which is 1 above the strike or 1 below the strike. Now remember this variable, right? This is why I emphasized on this, because once we have this save strategy functionality, even if all your legs are expired of a saved strategy, you can reload that strategy and give the instruction that you want to load it by the count of strikes away from the ATM, away from spot, or percentage of strikes away from the spot, and your expired legs will be replaced by currently valid legs, right? So that's the long and short of the strategy builder. I hope it was I hope this will take you far in your journey, in your option trading journey, especially when it comes to starting out with strategies and understanding how Greeks work and understanding how payoffs work. Right. So thanks everyone. I'll take any questions if there are any. Swatik. Do we have any questions?
Yes, Natish, I hope you can hear me, right?
Yes, I can hear you now. Yeah.
Am I audible, Nitish?
Yes, you are, Sautik.
All right, thanks. The first question I see would be regarding limits that we can create in general for F&O trading. Uh, I mean, I think customers are aware they can use shares as margin. There's a specific question if, in some way you can use your FDs to create margins or, use as collateral in some way,
Hmm.
especially for option selling.
Yeah. That's slightly off topic, but if you could put that in mail, whoever is asking that, we'll get back to you on mail. Yeah. If there are any questions relevant to the strategy builder functionality, please let's have that.
There's another question. How do you set, stop loss orders for these?
Okay, the stop loss when you get to the portfolio, when you get to the basket, there you'll have the option of let's say we were doing this. If this is a long bank nifty straddle, and we add to basket. Okay, I'm getting an error, but basically from the basket, you'll be able to change the order type and make it a stop loss order. Yeah. Any other questions?
Sure. Another one that we usually see would be, I mean, you can always do this manually, right? What is the benefit of a builder in such?
Well, yeah, I mean, if see, usually say for example, it's a straddle, right? In a straddle, what you're trying to do is you're trying to reduce your delta, but how reduced is it? Or it may be possible, because of some kind of disconnect between the calls and the put option chains, is that you may find that your delta isn't really gone yet. Like for example, here we see, I mean, previously we saw when we were in the other short straddle, we saw that we had deltas of about 22 and 20, and our net delta was not reduced that much, right? It was reduced to some 5 or something. And here we see that we have deltas of, I'll increase the font size again. Yeah. So here we see that we have both smaller deltas and the residual delta, right? Or the net delta of the strategy is far lower. So if I wanted to compare two straddles, right, I would do this. I would play around and load up one straddle and then the other, and then see which one works best for me. I hope that makes sense.
Yeah, that does, Nitish. Thank you.
Yeah, so a lot of things get clarified, right? And that's just like for this strategy where we are doing the delta. Maybe we were having a gamma strategy, or maybe a lot of people like what do they call it, gamma scalping, right? So for gamma scalping strategy, maybe your gamma would be more important to you. If you're short straddling just to earn the theta would be more important to you. So it just depends upon what your strategy is really aiming at. Are you trying to play the volatility? Are you trying to play the gamma? Are you trying to milk the theta? This gives you everything, and also at the end of the day, it'll tell you your total landed cost. So usually it's only when you go to execute a trade that you find out. Here you're doing it upfront. Yeah.
All right. Another question that we see is what are the kind of underlines that you can, explore through the strategy builder?
Right. So right now we have index options. So we've got the bank nifty, fin nifty, and then we've got single stock options. Soon we're going to add as we develop the tool further, we're going to have currency and commodity also, but that's somewhere in the distance. I can't really say. Yeah. Yeah, Sautik, if there are no more questions, can...
Yeah.
Yeah, that's all I see for now. Thanks for the quick demo.
All right. Thanks, everyone. Thank you for joining in. when, with every upgrade also, we will, we will host more webinars, and specifically on volatility trading. I mean, I think you guys can, very shortly we'll have an entire series on volatility trading and other strategies, that option strategies that should prove useful, right? So thanks everyone, and have a great day, and have a great weekend coming up. Thank you.